SUI volume jumped 37% while price held near 97 cents, turning a fading downtrend into a base test. The move matters because volume is participation, not proof of a breakout. More traders are active, but SUI still has to prove that buyers can turn activity into a structural change. Price has stopped falling aggressively, candles have tightened, and volatility has cooled. That is different from a clean reversal. The chart now looks less like panic selling and more like a market deciding whether buyers have enough strength to reclaim higher levels. That makes the setup useful for traders who want confirmation rather than a chase. A volume spike near a base often tells you attention has returned before it tells you who has control. 20,947 starts with the base around 97 cents. A base means sellers are no longer pushing the token down in a straight line, but buyers have not yet taken control. Higher time frame moving averages still sit above price, so the larger structure remains bearish. Shorter averages are flattening, which means downside momentum is weakening. The chart is shifting from aggressive decline to decision zone. That distinction matters for SUI because a base can last for a long time before the next real trend appears. A base can also attract late shorts who expect another breakdown, which is why resistance reclaim matters. If those shorts are forced out, the move can accelerate, but acceleration still needs spot demand to last. Derivatives activity adds pressure. Futures inflows showed sharp bursts, including a 672% net increase over short periods. Futures are leveraged contracts, so they can amplify moves when traders crowd into one side. The long-to-short ratio stayed around 1.9 to 2.2 across major exchanges, which means more traders were positioned for upside than downside. That can support a bounce, but crowded longs can also unwind quickly. If price moves against them, forced closures can turn optimism into fast volatility. This is why liquidation data matters. If short positions close under pressure, price can rise quickly, but that forced movement is not the same as steady buyers building a long-term position. Spot flows keep the story from becoming simple. Short-term inflows suggest some accumulation, but longer intervals still show hesitation and intermittent outflows. 20,947 is not confirmed by volume alone because spot buyers are the people actually purchasing tokens, while futures traders can open and close leveraged bets quickly. When spot and futures do not line up, price can look stronger than the underlying demand. That is why SUI needs visible buying beyond short derivatives bursts. The level that matters is the $1.10 to $1.15 range. That zone lines up with resistance and moving average pressure. A reclaim there would show that buyers are doing more than defending 97 cents. Failure there keeps SUI inside a broader bearish structure, even if volume stays elevated. A break without sustained spot demand would be fragile because leveraged traders can leave faster than long-term holders. For this setup, the first clean proof is not the volume jump, it is how price behaves at resistance. A clean reclaim would also reduce the importance of the old lower high pattern. Until then, sellers still have a defined zone where they can challenge every bounce. The next signal for 20,947 is whether SUI can turn higher volume into a close above $1.10 to $1.15 with spot demand behind it. If price stalls below that zone, the base remains only a pause inside a larger downtrend. If buyers reclaim it and defend it, the 37% volume jump starts to look like early participation rather than temporary speculation. Until that level changes hands, SUI has stabilization, not a confirmed structural reset. Volume after the resistance test will be more useful than volume before it. Strong participation below resistance can fade quickly if buyers fail at the exact zone that matters.